What do you need to know about closing down your property company? I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. So you've decided to close down your property company. Now that's great news and congratulations on getting to that stage of your business's life cycle. Now this may be a one-time thing that you do, or it may be something over a period of different businesses that you kind of go through several times. But what are the different options? What are the different steps? And what do you need to know about this? Well, the starting point depends how you are going to be selling things. And we're not going to be covering the detail of that today. Check out the separate video on whether you sell your shares of your company or whether you go down the route that we're going to be talking about today, having sold all of your properties and you're now left literally with a company that's got not really anything in it. Now, when you've got the company, you've sold all the properties, you've now potentially just got the cash in the bank and the shares that you originally held. Now, this is where we get to that point of what do we need to do next and how do I get my company closed down? And this depends how you want to go about closing it down. The reason I say it depends is because you may decide over a number of years you're going to just draw on that money and take dividends out each and every year until you get to the point that you no longer need the company because there's no more money in the company. However, I do appreciate that might not be the best option because there may be a big lump of money in that company that you want to get access to now. So that kind of leaves us with two different options that we may have available to us. One is called a members voluntary liquidation. And check out the separate video which will explain what that is all about to give you an idea of how that works. The starting point for that option is you need to be getting an insolvency practitioner involved and they will take you through the process. But as I say, check out the video which will give you an idea of how that fits together so that you can then have a look at what you need to be doing as part of that process. If, however, you've taken all of your money out and you now have under £25,000 worth of reserves, which depending what you've been doing over your property adventure, whether you've been kind of taking the money as you've sold the properties over a number of years, you may now be in a position where you've actually now got under £25,000 of reserves. Or you may be able to manage that in a 12, 18 month, 2-year period to get under that level. You may ask, why do you care? And the key question here is because after this point, we can use a simplified strike off or dissolution process. However, there are a few steps that we need to be aware of when using this methodology. So today we're going to go through this methodology to give you an idea of how that fits together. Check out the members voluntary liquidation if that is the camp that you fit into. And also check out the video on the options of selling shares and also selling the properties out of the company to decide what's the right route to go for. Now, on the basis we're going through our simplified dissolution process today, let's get started. Now, our first port of call is going to be when can I actually strike off the company? Well, the reason you may want to strike off the company, like we said, sold all the properties, you've got all the money out, you're at a position in the business now where it's just literally a point of getting rid of the company and you don't need it anymore. It's served its purposes and it's no longer got any use for you. It's also a point to note that if you set up a company with the intention of doing something but that company purpose hasn't really been required or fulfilled, this approach can also be used for that type of company. The main reason we need to be under 25,000 is to enable us to do this process. So if you've had a dormant company sitting there for a while and you decide actually we're just gonna get rid of this company, we don't need it, let's remove it from the problem of having to do all the annual processes that you have to do when you have a company, this is the option that you need to take unless you wait for Companies House just to strike it off themselves without you having to take any action. This is the proactive route of making sure that everything is closed properly and in good order. Timing is always key with these things. So when can you actually start this process is only at least 3 months after you have stopped trading. So if you've recently sold a property and that was the last one, you may need to just wait several months to make sure that you have actually cleared off everything from that point of view. Quirky point is also that if you've changed the name in the last 3 months, you won't be able to dissolve the company until you've actually got past the 3-month period. And the final point is that you've engaged in any other activities that are anything apart from in the purpose of closing down the company. So we are literally in that stage of the company where we are properly closing it down. Everything is coming together and there has been no activity apart from close down activities for the last 3 months. If you try and do it before then potentially it will be rejected and you'll have to start the process again. Before you can make the application to dissolve the company, you do need to take a few steps. And this is normally that you've cleared all of your balance sheet. So this is certain things like if you've sold the properties, you've paid off all the mortgages, you've paid off all the investors, you've closed down any PAYE schemes, you've closed the bank, and you've moved any other assets that may be in the company out of the company name into your own or wherever they may need to be going. So this is really just tying up all the loose ends of the company to make sure that in essence everything is straight. One thing not to do though is to resign as a director, as you'll need to be a director to enable you to do the sign-offs to do the application for dissolution. So don't resign yourself as a director at this point. You need to still be in office to enable this process to be completed. A very important point to note is that you need to close down your bank accounts, and that is properly close them down with the bank so that they no longer exist. This is for any and every bank account that the company has, and it must be done before you put the application in. The reason I'm reiterating this point so strongly is because if you don't, then any assets of the company on dissolution get frozen. That includes any bank accounts. So if you've still got, say, 20,000 sitting in that bank account, that will become Crown property at the point of dissolution. You will no longer be able to access that money and that will disappear. That's not yours now. Now, there are ways of restoring a company, which we're not going to go into today, but that is a costly endeavour. And if you had 20,000, you'd probably end up with a few grand less after the restoration process for getting it all sorted. So, very, very important, close down the company bank accounts before you move on to any of the next steps that we are discussing. As you go into this process, you do need to notify certain individuals or businesses that are stakeholders with your company. Now, if you've tidied up everything so there isn't anybody left in the company that you owe any money to, then you've not got really any issues because there's nobody to notify. If, however, you do have some creditors or investors or anybody else who you owe any money to, as you go through this process, you do need to tell them to make sure that you'll fulfill your legal duties as a director of the company. So these include people like the shareholders, any creditors you owe, any banks, any investors, maybe employees, guarantors, HMRC, all of those sorts of persons that you need to know. Let's touch on HMRC at this point, because if you are closing down the company, it would be ideal if you completed your final set of accounts and submitted those accounts to HMRC. In there, you need to make sure that it does tell them that this is cessation, that you've finished trading. So on that basis, they know that they're not going to be expecting any further tax returns from you. This also is key if you owe them any tax, that you pay them before the date that you're looking at dissolving, so that they know that they've got all their money. They're one of the key people who will halt dissolutions if they think they are owed any money. This notification that you need to send needs to be done within 7 days of anyone becoming one of these types of individuals. So on that basis, this will continue all the way through to dissolution. So if you do start working with someone or you get involved with someone, for example, someone to help you with the process of dissolution, you need to give them notice that you are dissolving so that it is clear to them that that is what is happening. When you have notified everyone, when you've cleared all the company's assets, bank accounts are closed, then you're in the position to complete the dissolution paperwork, which is known as a DSO1. Now, this dissolution paperwork is a form which basically puts in an application to tell Companies House that you are dissolving the company, and this form needs to be signed by all directors of the company. So if you've just got one, it'll be that one person. If you have 5, it will be all 5 directors. There is an online process you can follow to do this, or you can do it by paper and send it to Companies House. Now, what do Companies House do when they receive this paperwork? Well, they have to follow a number of steps. First of all, they will register the information that's been submitted to show that now there has been an application to strike off the company. They will then send a notification to the address and the registered office address of those involved in the company to acknowledge that this process has been started. This is to make sure no one can close the company down without realising it's being closed down. So this is part of their security process to make sure it's not fraudulent. They're then going to publish a notice in the London Gazette to basically tell all creditors or interested parties that the company is being struck off, and if there is any debts or any money owed by that company, that it's now time that they need to get in touch. Otherwise, the company will be dissolved and any debts will be basically disappear. So this is quite an important stage for Companies House, and this notice is then shown on your Companies House page to show that that notice has been officially applied and been done. If there's no notifications from anyone to delay the strike off, then theoretically Companies House will then strike off the company 2 months after the notification or around that sort of time, and the company will be officially struck off. What this means, it will show on Companies House register as dissolved, and it's no longer an active company. So everything to do with the company can be put nicely together and out the way, and then eventually after probably 2 to 3 years, I'd be suggesting you can get rid of the records. As you can hopefully see, it's a relatively straightforward process. There's just a few boxes you need to tick, and the main area that you need to kind of concentrate on is getting your ducks in a row, and when you've got your ducks in a row, then you can do the dissolution paperwork, and then it's just a matter of time waiting for the different steps to have been followed through, and assuming that you've got nobody who's going to be calling any objections on why the company can't be dissolved, it should be a relatively straightforward process to get through 2-3 months and then have the company dissolved and struck off. This is a great way of closing down a company if it's a relatively straightforward company. If there is more to it, then you may need to be looking at things like members' voluntary liquidations and other approaches to ensure that you are closing your company down in the most tax efficient and best manner for you. Check out the videos on the other options to see how things fit together for you and for your company, as it will very much depend on your personal position and what you've done with your company to see what is going to be the best and the right option for you. Hopefully today you've discovered exactly how you go about closing down a company. If you have any questions, please leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. Let's make tax less taxing.